Welcome to Trading the Close on this Monday. I'm Toni Valliere with Verified Investing. And here's what's making headlines today. The Dow starts the day dropping 400 points as the market reacts to Fed Chair Jerome Powell's statements on 60 Minutes that reiterated the potential for fewer rate cuts than expected. He also predicted that more small banks will likely close or merge due to commercial real estate weaknesses, but says the problem is ultimately manageable. Snap, the developer of Snapchat, is looking to lay off 10% of its workforce, about 500 employees, to promote in-person collaboration. McDonald's misses revenue targets, citing the Middle East conflict as impacting sales. Tyson Foods stock surge after beating profit estimates for its last quarter. Caterpillar stock soars after reporting fourth quarter profits that were way better than forecasted. And Estee Lauder's stock also surged after reporting profit that beat expectations by a wide margin, but the company also announced their plan to cut about 3,000 jobs as part of its profit recovery plan. Let's take a look at where things stand with the markets just minutes before the closing bell. We are still seeing a lot of red across the board. The Dow down 215 points, down more than 0.5%. The Nasdaq down 33 points, 0.21%. The S&P 500 down just slightly, 2 points. Oil slightly up right now. Gold down $14 and Bitcoin down $236 at this time. All right, let's bring in my special guest. We've got Chief Market Strategist Gareth Soloway with a recap of the day's trading. Red across the board. So what do you make of the market's reaction to the Fed statements on 60 Minutes?
Yeah, so I think the first thing is the Fed is continuing to try to talk this market down from expecting 6 cuts this year versus, what the Fed is saying, which is 3 cuts. And Jerome Powell also said it probably wouldn't be till the second half of the year where they start to cut.
Okay, let me ask you real quick. What is the second half? When does that start?
That would be like starting after the second quarter, so going into the third quarter. So you have January, February, March is quarter one, April, May, June, and then July begins the third quarter. So the idea is that's what they're telling us. They're choreographing us to do that. But really, when we look at the Fed tools, the Fed funds futures tools, it's telling us still May is on the table, and the markets are not letting go of that. They are holding on to that rate cut.
I want to ask, why? Why are the markets holding on to that? Why the discrepancy?
It seems like the market's really hung up on something happening that's going to trigger a big market decline. Now, whether or not that happens, we don't know. Certainly, it's not looking like it in the current markets because, the Fed can throw anything at it. We have wars breaking out. We have, conflicts here and there. And for the most part, the markets just open lower and then grind back up, kind of like what we saw today. But the markets are still kind of sniffing out something that is going to push a rate cut still on the table for May. Now, again, that can change. If we get good jobs numbers, if we get good economic data, the market then may push it back. Because we were expecting initially a cut in March, and that's now off the table because the jobs number last week was so good.
And Powell is ultimately holding off to prevent a resurgence in inflation. Is that the case?
Yeah, that's exactly what it is his worry, and he keeps saying this, and the market keeps disregarding it, but his worry is a repeat of what happened in the 70s and 80s, where you had this big pop in inflation, the Fed attacked it, and then they started lowering rates too soon, and you had another bigger pop in inflation. And so this kind of M kind of movement here with higher highs in inflation, and he wants to try to avoid that. I wonder if that's going to be possible, though, because you look at the U.S. debt, where we are 34 trillion, credit card debt, auto loan debt. And again, even though the Fed's balance sheet has shrunk just a little bit, there's been so much, kind of surging in debt across these many planes that it's kind of compensating for that. And it's still so much liquidity in the system, which explains why you see some of these moves in some of these stocks that really seem to defy gravity.
All right, what is the S&P telling you?
Yeah, so the S&P today, we saw that initially we opened lower on the back of the Fed's statements, Jerome Powell's statements on 60 Minutes, and we did actually see some selling pressure. So the first hour was selling pressure to the downside, and this is pretty common. This is when the volume is heaviest during the day, in that first hour of trading. People over the weekend, they're like, I want to buy this, I want to do this. They do it in the first hour. Then what happens is you get into this float period where the volume starts to decline, and anytime you have lighter volume in a market, it tends tends to favor the upside. The reason why it favors the upside is because it means institutions are not involved. Institutions are usually the ones shorting markets or selling markets. The buyer, if it's retail, which is what happens in the middle of the day, they're always generally saying, oh, things are going to be good, soft landing, like I'm going to hold for the long term, so even whatever, or they're chasing, they're FOMOing into these positions. So in the light volume, you get this gentle float right here, and then you can see towards the end of the day, volume starts to pick up again. That's where a few of the bigger players have to deal with their end of day positions, and you're starting to see a little bit of this gyration. But really, it's a tale of a market that initially sold off and then kind of canceled it out for the most part, with the S&P barely closing down today. I mean, we're very minimally down on the day.
We had a lot of big market movers today. Nvidia, Snap, Boeing, Tyson Foods, Estee Lauder, Meta, McDonald's. What have you been watching?
Yeah, so definitely Meta. I thought that was interesting how Meta actually did have, so you wouldn't call this a reversal candle because needless to say, we had a huge gap up on Friday, but I did find it interesting that for the most part, we saw Meta down over $15 today, and that was just people must have been in a point where it was a lot of panic and short covering on Friday, which pushed it up a little too far, and then we saw kind of reality coming back in. So my guess is where Meta settles in here, it's probably somewhere in this range. This is kind of like the equal area where it should be trading. This was a lot of short covering up here where it pushed it up too much, and now you're just getting the reflux kind of movement to the downside. So somewhere in here we'll have to see, and it's assuming the markets hold strong. If the markets do start to correct, then eventually there's this huge gap. Gaps are generally meant to be filled. So, but that would only happen if we started to see a bigger correction in the markets.
Okay.
And interestingly enough, right, so if you look at, let's go to Nvidia's chart, because this is just remarkable. The power of this stock defies gravity. Everything I've learned in my 24 years.
Here.
Yeah, this is like .com when I started trading type action. The only difference is back then the biggest companies were like $100 billion. Now it's like 1, 2, 3 trillion, no big deal, right? But again, one of the charts I want to show you, and this is for me something I'm going to watch really closely tomorrow. Does Nvidia finally stop on this line? I don't really have many more trend lines, right? So if it gets through this, who the heck knows? But what we do see here is that you have a pivot point going back to 2020. Then you have this one in 2021, late 2021, and we just had this monstrous move, and we are tagging that upper trend line. So the question is are we going to see finally a top on Nvidia? I honestly don't know. At this point, it is, again, like I said, certain things in the markets get so irrational that you can't make heads or tails out of them.
You say you don't have many trend lines because it just keeps going up.
It's, at a certain
There's
point,
one
it's
direction.
so vertical. Like it gets so vertical that it's like, okay, well, you could try to say, okay, well, if I connect all of these, right here, maybe, but even that's kind of like right up in that range as well, right?
Yeah.
And then after that, it's like, well, there's just, at that point, it's just vertical, and it just doesn't make much sense at that point. So yeah, you're getting to the end of the road where it's either going to break and defy every single line on the chart, or it finally will see a corrective move. But again, I mean, this is incredible market cap creation. And I think that's one of the things that the Fed probably is aware of, is that it's a lot of money. When people see, I mean, this is literally, I mean, Meta on Friday, I believe it gained the most in a market cap in one day of any company in history, over $200 billion. So think about all those people that had that in their portfolio, looking at their portfolio and say, wow, this is great. People go out and spend money, all right? In fact, there was a story just recently, one of my buddies was saying that his mom was like, hey, I'm going to take the whole family on a Disney cruise, which isn't cheap.
No.
But again, they're looking at their statements and they're saying, you know what? I feel rich right now. This is amazing. And again,
dangerous.
It is dangerous because it creates this false narrative like this can last forever. And then when things collapse, and this happened in 07, 08, 09, I remember hearing about people that literally had to go, they had retired or they were planning to retire. They lost it all and had to go back to work for a long period of time.
I've heard that story. I think we all have, unfortunately.
So a couple other things here. I just want to show this chart of McDonald's. McDonald's had that big drop today. Look at this past trend line on McDonald's that kind of gave us this short-term high up here. If we look back to the COVID lows right down here, and it comes right through these levels. In fact, I covered this a few months back in the game plan when we talked about this upper level, and you can see the drop today, a very nice drop there. But again, just a consistent grind higher. This was a breakdown, and I know you're taking the Winning Trader series right now.
Yeah.
But again, breakdown, and then what do we call it when it gets back to that line? Return to the scene of the crime. and it's usually pushed back off of that, which is what happened right there. Let me see. There was one other thing I wanted. Oh yeah, you brought up Estee Lauder, right?
Yes.
What did they call what did they say? What was it? Profit reserve. It was what was that term?
Yes, no, I have it here. Profit recovery plan. Explain that to me.
Well,
I know.
I mean, talk about like dressing it up in a bow. It's a profit recovery plan, right?
Yeah, they did okay.
I mean, it's
they want more.
Yeah,
is that what that's saying?
And I think what it is they're trying to make it sound a little better than, oh, we got to fire a bunch of people because we have to cut back.
And it is a bunch of people.
Right.
Yeah,
so,
about 3,000.
And it's something I've talked about a lot is that every day, and you report it every day, I talk about it every day, is there are more and more layoffs here. And it seems like we've seen the government continue to hire, but the private sector is starting to really cut back. And at some point, when does that really start kicking into the economy? It is.
Yeah, for sure. So I know coming up, other companies are reporting earnings this week, including Disney, PayPal, Pepsi, Uber, Amgen, Eli Lilly, Toyota, Wynn Resorts, Expedia. Those are just some of them. So there's a lot going on this week. Before we do move on to the rest of the week, though, let's touch on, you want to go to Disney? I was
just bringing it up because I haven't actually looked at this in a little while. It looks like it's been in a little bit of a nice little uptrend here. And again, what we could see here on the charts is that you did have this kind of move up here, and then a little bullish flag pattern right here, and it's trying to play out. The problem is you have a gap fill right here and a little pivot high right in this range. So going into earnings, there might be a little bit more upside that can be squeezed out of this, but my guess is 100-ish is going to be some big resistance on this one. So again, at least, listen, it still could go up $4 into that earnings, but again, that probably is going to be a pretty heavy wall right there. But I think I know what you were going to talk about. You wanted to talk about Bitcoin, right?
Yeah, we got to see where it's at this hour, of course.
So early in the day, Bitcoin popped. Early, you can see this little tail here. If I flip to my 10-minute chart, we can see early in the day it was all the way up here, and then the selling came in. And what's interesting about this to me is that, again, Bitcoin is still a risk asset, and it's not behaving well. And again, same kind of thing as we just looked at that McDonald's chart where it's just the inverse of that, where you had all this kind of, levels right here, right? All these levels here going here. You had a breakdown to support, a retrace to the scene of the crime, and then the rejection comes in, and that's very standard for it. And you can see Bitcoin again trading at 42,400. So again, the simple takeaways for this chart, and again, this is just pure and simple technicals data, is that if you can get above here, right in here, right, then this is free to have a bigger pop higher. But this remains that huge level of resistance, and as long as it's below, technically you're supposed to. Our gut may not, our heart may not want to say, oh, it might go down, but this is resistance until proven otherwise, and it generally wants price to push back down to that key level down here around 38,000.
Is that what you mean when you say it's not behaving well? It's not going exactly the way you would expect it?
Yeah, so like today's price action, it had this move up where it was back above, back to 43,500. It was a perfect opportunity for the bulls to grab the bull by the horn, if you will,
take off
and just push it the rest of the way through, and it failed and came all the way back in. That's not the good price action that you're looking for if it's going to be able to break out.
Okay. All right, Gareth, thank you so much. Before we go, what else are you looking for tomorrow or the rest of the week?
I think really the big things is this market is going to continue to stay relatively strong as long as Nvidia stays strong. So as weird as that sounds, it used to be Apple. Apple used to be the market. Now it's Nvidia. As long as Nvidia's up, the markets are going to do fine. If that starts to come back in, then I think the markets start to slip lower. So I'm going to focus on that. You mentioned a bunch of the earnings announcements. A lot of the economic data this week is a little on the lighter side, so it's not huge stuff like last week when we had the Fed and such and the jobs report. But I think, again, keeping an eye on Nvidia and the semis and the big cap tech are key.
Real quick, what would keep Nvidia from being strong? Is it competition that comes in?
No, at this point, it just would be oversold. At some point, there's going to be institutions that are going to say, hey, listen, this is getting too lofty in terms of valuations. And then the worry is you've had so many people pile into this, kind of not asking any questions, not even thinking okay, there's valuation issues here, what's the metric? And you can have a lot of this cascade, kind of like a snowball down the hill, where it just gains momentum. So the institutions are always the ones that try to sell first. They want to get out, but then if it freaks out a bunch of smaller investors, then you can start to see the cascade to the downside.
All right, Gareth, thank you very much. And you can watch Gareth every weekday morning before the opening bell on his show, The Game Plan, that airs at 9 a.m. And thank you for watching Trading the Close on this Monday. We'll be back here tomorrow, so make it a great rest of the day.